All right, what's up, everybody? Welcome to Tuesday 10X interview. For over 15 years, I have been interviewing top producers, industry leaders, 9 o'clock every Tuesday. And the goal from the day I started doing this was to put on the best sales meeting in the mortgage industry for that week. I think leadership is important. And today, I'm not going to have a top producing loan officer. I'm going to have one of the industry's longest and most important coaches, trainers, leader. Dale Vermillion. Welcome, Dale. How you doing, my brother?
Hey, Dave. So great to be with you. Thanks for having me. It's an honor.
Yeah, well, it's great to have you. And it's the first time I've had you and Jake. So Jake is the CMO, Chief Marketing Officer for Vermillion Consulting. But to me, Jake is more than that. I mean, he is just the epitome of a next gen leader. He's young. I don't know his exact age, but he looks like he's 21.
I
If I
feel
had a
older.
guess, I'd say 28. But dude, I'm really impressed with just how smart you've gotten around the mortgage industry and that what a great job you do with leadership on LinkedIn. So it's good to have you and your dad and your mentor here.
Oh, it's great to be here. And yeah, I've had every advantage, haven't I, to get up to speed with this industry. Obviously, my dad's legacy in this space, and then just getting to interface with people like yourself and the amazing mortgage coach community. So yeah, excited to be here and kind of give a little bit of a different lens, maybe. So yeah, thank you for those kind of words. It means a lot.
Yeah, well, and guys, before we get into the topic, like what's working, what's not working, I just want to make sure if you haven't heard Dale speak, you get a lens of just how many people he's coached, how active they are in the market with both consumer direct, which I think is really unique. And Dale has literally been, one of the icons of helping consumer direct companies win. But he also does a great job and helps a lot of people with distributed retail. So he really has a unique perspective of what it looks like to win if you're a servicer, if you're an online lender, and he's also got a unique perspective of what it takes to win as a local referral-based advisor. So Dale, just how many folks are you touching on an annual basis right now? Just loan officers, C-suite people, like give us a perspective on that.
Yeah, we work with about 30 companies around the country at any given time. Probably, I don't know, 10,000 loan officers that we're coaching through the course of the year and training, and hundreds of executives across the nation. We've trained, gosh, 1.5 million in the last 30 years, and um, been very fortunate to work with over 800 lenders in the 30 years that I've done this. So, but we get to hang around with a bunch of top people and a bunch of top producers, and that's fun because then I can share that information of what they're doing with those who want to get to those numbers, and that's what it's all about. It's about sharing knowledge within the community so that people can be the best they can be.
Love, love, love that. So let's think of this as a football game. This is the first quarter. We're going to win in the fourth quarter. We'll get more tactical for anyone watching this. But in this first quarter, I want to frame how I see this market, and I want to hear you and Jake share yours. I mean, I think we're in 2025, and from a technology perspective, this will look back on the year of agentic AI, AI agents coming into play. I think also from a been in this game for a long time, we now have two category kings. We have Rocket, which has 1/5 of every mortgage in America under one brand. So like we have a category king with double digit market share.
Yep.
And I am assuming the Compass transaction is going to go through. And we now have a category king in real estate. Like we've got a real estate brand with, I think it's like 19-ish% market share. So
Crazy.
like always, and I do believe the industry will stay fragmented with a lot of small brands, but we have two clear category kings. What are your thoughts on that, and how do you think my audience is local referral based mortgage professionals? Yeah,
Yep.
Mortgage Coach Trusted has some consumer direct, but the YouTube channel, the loan officers watching this right now, they're either local referral based or they're managers and leaders of local referral based. What does this mean from your perspective?
You want me to take that first, or Jake, you want to go?
Whatever you guys pick, who
Yeah,
goes
you
first.
start first, and then I've got a few thoughts I'll
Okay.
follow up
All
with.
right.
Yeah.
So the first thing that I would say to everybody watching this, Dave, is look, there's plenty of business for everybody to be successful in this industry. Don't let those numbers in any way, shape, or form intimidate you. Okay. Yes, big companies have a lion's share. They always have. I mean, go back to the 1990s when AmeriQuest was around and Countrywide was around. They had a massive market share of the industry. Go back before that to the days of Conti Mortgage. For those of you who've been around 40 years like I have, you're like, oh yeah, I remember those names. That's part of the industry. And there's still, especially as a local loan officer, you should own your marketplace. So even though the big guys are out there and they're always going to get their lion's share, if you own your marketplace and you do the things you need to do to really be tapped into that marketplace and you become a known entity and a name within that, you don't need to worry about the big guys. They're actually doing you a favor because they create a lot of good activity. They create a lot of good things in the industry that are happening to create awareness for borrowers. You can literally ride on the heels of their marketing, and you can use that to have opportunities to talk to all kinds of customers about the business. The bottom line is there's plenty to go around. And if you do it right, and that's the key, we'll talk about that in detail, I'm sure today. If you're following the right strategies, you're building the deep relationships, you're making local presence, you're going to win more than your share of business at the end of the day. And I'm training so many 50, 70, 100, $150 million producers this year. They could care less about the big guys. They're just doing their job and they're winning big.
Love that. Jake, what do you have to say about that?
Yeah, a couple of things. So let me just follow up with what my dad just said. They were just so critical not to be intimidated by category kings like a Rocket, for example, right? And one of the ways that you do that is you actually run their same playbook. Now, there are a lot of people going to say, well, how could it possibly do that, right? They just bought all this data, they have all this technology. Like, there's no way that could possibly complete. But the reality is, look at how Rocket actually interfaces with their customers. They pick up the phone. They are a phone-based business. And so you as a local loan officer, like you just have to employ the same strategy and recognize the fact that, especially in this era, we're talking about AI and mortgage, right? We're in the era of GEO, some are calling it AEO, right? The idea of AI-enabled search. Where are your borrowers coming from? Where are they doing their research before they talk to any loan officer or any lender, right? Increasingly so, they're doing that with an LLM, whether that's Gemini or ChatGPT or Claude, you name it. The reality is those models, they're figuring out how they're going to recommend and whose content they're going to go out and find. If you're a local loan officer rooted within a local market, you have a good presence on Google Business, for example, you're likely to get served in those results before a large national lender. So you actually have advantages as a local loan officer, even to compete against the Rockets of the world with all of their data and all their technology. You just have to take advantage of the fact that you are local, serve your customers well, get great testimonials, and be willing to pick up the phone. And there's some more strategies we can talk about too on how to compete on that front.
All right, so that's the market. And remember, guys, this is a live audience. We have, what, 92 people on Zoom. If you guys have questions, put it in chat. We will answer questions live as you ask them. If you're watching this on Facebook, put questions in. We will get to them. If you're watching this on YouTube, put questions, comments, takeaways, and we will get to those as well. So that is the market. Can we agree that Dale just kind of connected the dots to some things you said? If you're local, you need to win locally. So there's, we'll cover some ideas as to what does that mean to win locally.
Yep.
And I really believe you need to win your database. Like, you need to win your database and you need to win.
No question.
And those are the, at the highest level, like the formula to thrive, like kill it as a local professional, win your database, win locally. You're good to go for decades to come.
Yep. There's no question that is dead on. Look, the bottom line is we need to understand that it's all about being active, both with your database and in your local marketplace, and building deep relationships across the board. Look, this is not rocket science. If I were going to say one thing to free all of you up today, quit outthinking and overthinking the business. It's not that hard, okay? We get all hung up on things like what are rates doing, what are products doing, what's the market doing, what's the competition doing. Let me tell you something about your competition that I've trained loan officers my whole career. Your competition should be your best advertisement. Let me say that again. Your competition should be your best advertisement. Why? Because if you're building deeper relationships, you're offering more unique custom solutions by utilizing MortgageCoach and all the tools you have through technology. If you are building deeper relationships with your realtors and your partners and the builders in your market, and you're really saturating the community, nobody can touch you. And if they happen to try to pick you off, here's the beauty of that. The minute they talk to you and then they talk to your competitor, they're going to see how incredible you are, and they're going to bounce right back to you. It's the analogy I use all the time. And when you buy a house, you start looking at houses, you go out and you visit 3 or 4 of them, and you say what you like and what you don't like about each one. And then you walk in one house, you go, ooh, this one's really good. This is close to what we want. And then after that house, what starts happening? Every house you look at after that, you start comparing back to that house. And after about 3 comparisons, what do you decide? That's the house we need to buy. It's exactly what your customers are going to do when you do it right. So you've got to go deep in your communities. You got to be out there. Here's the #1 news flash to winning your local market. Get out of your living room. Get out with your partners. Get out and meet with your customers. When you have an application, if you can, meet with your borrowers and your realtors. You do the pre-approval while the realtor's finding homes, and you get all their docs, you get their spouse, you get the deal. It's done. It's over. You move on. It's that simple. And then come back and every morning call your database. If you'll just do those 2 things, not rocket science, you're going to win big, guaranteed.
Can I add some data to that?
Of course.
This is such a critical strategy that my dad is laying out here, right? So let's look at the data direct from Zillow, right? 80% of buyers today are attending at least one open house before buying. 40% of people who attend an open house are going to make an offer. 70% of all contracts that are agreed to by a seller are offers made directly at an open house. Look, the reality is buyers are visiting fewer homes than they used to in the past, which tells us that when they get there, they are way more likely to move on that house. Look, I'm going to use my wife as an example here, right? There is no signal of intent that you could look at online that would indicate our interest in potentially buying a different home here in a local market, right? She has shopped. She's looked at thousands of listings on Zillow. She has hundreds of homes saved into her tab, right? But there's no promotion that you can find on my LinkedIn. We've not been looking at, we've not filled out any interest forms. We haven't talked to a law officer, nothing, right? And so if you combine this idea, if you're going to sit at open houses, one, you're going to make more referral partners because there are realtors who would benefit greatly from someone offering to be there to answer their customers' questions, to guide them through the process. 6 out of 10 home buyers don't understand the process. We know that from First Home IQ's research, right, Dave? So if you're there to be there as their educational guide, offer to pre-qual, offer to pre-approve, answer questions, like you can pick up more referral partners. You can be the one who's submitting those offers that have a 7 in 10 chance in being accepted. And then if you do what my dad just said, you go home and you call your database proactively, you're going to find people who are on Zillow scrolling, thinking about attending an open house, that the rockets of the world, there's no intent signal on planet Earth that they can know that that person is interested in buying a home. Make sense? So you really can actually beat these larger national competitors by just doing these simple strategies.
I love.
And if I can add one more thing in that, so good, Jake. So proud of you, man. Great knowledge. Think about this for a minute, okay? You go to an open house, and let's say 22 people walk through that house, okay? Not an uncommon number. You have a conversation with all 22 of them where you get initial information to get a pre-approval done on that. Only one of them can buy that house. The other 21 become fodder for all of your other new realtors you want to prospect for. Now you got 21 pre-approvals. You can go out and you can call every realtor you've ever wanted to work with and say, look, I'm not calling after your business. I'm calling to give you some business, because I've got 21 pre-approved customers that are looking for a home in a price range of X at an open house that I just attended. And you know what? You've got 7 listings on your site that fit in that category. I would love to match the 2 of you together. That is how you win a realtor, not by calling up saying, I want to be your lender. Let me tell you every reason why you should choose me. Everybody says that. You got to be different in the local marketplace.
So by the way, guys, I think we got a couple clips just now for the Uncommon LO. I want to remind everybody, if you have not started following Uncommon LO on Instagram or TikTok, make sure you follow it. This week, we put a couple clips from Scriptapalooza, and actually, I was planning for the next 2 weeks just to like clips from Scriptapalooza, but Dale, you guys, you just nailed a clip that we need to put in Uncommon LO. So before we get into specific what's working, what's not working, Jake, you brought up First Home IQ, and this is another theory that I have. If you're local, you need to win your database, you need to win locally, and first-time home buyers should be your first priority. And here's my case, and then I'd love for you guys to pile on. Number one, as we have agentic AI and we have big players out there, rate and term refis are going to be the easiest to automate and for servicers to keep, and going to be
Yep.
hard for you as a local loan officer to maintain your rate and term refi market share. That's like the hardest.
Yep.
The one that you have the most advantage of all the things you could do is first time home buyers. So when it comes to winning today in a way that's future proof, first time home buyers. Number two, they're hard. I mean, affordability is a real issue. And there's a lot of confusion. There's a lot of people on social media saying, be a long-term renter and making a case for long-term renting. And doing a really good job of making a case for long-term renting. So there's confusion. There's tremendous confusion around should I buy now, should I wait? And so, guys, I would love to hear both your thoughts on if you're local, you're referral based, you want to win today and do it in a way that's future proof, you've got to have a first time home buyer strategy. And I make
Yep.
the case that it's North Star. I would love to hear both your thoughts on that.
Yeah, I'm gonna let Jake take that one first because he's closer to that age group.
Let me say a couple of things here. You may need to change your marketing quite a bit. First and foremost, this is a longer sales cycle. You're talking 24 to 36 months, a lot of education. So your marketing needs to become an ecosystem. Okay. And it has to become advice based, not product or
Good.
pricing based, right? So there are still too many lenders and loan officers who are pushing detailed product information that's overwhelming and confusing and way too early in the funnel for most borrowers. They're pushing rates. Doesn't matter. They're not home ready. They're not credit ready. They're 24 months from the point of transaction. We have no idea what rates are going to be at that point. So you have to reconstruct your entire funnel to be educational, and you need to lock that person up, because if you don't, they will find their way into someone else's ecosystem. And the cool thing is there are tools like a FinLocker, for example, that allow you to be able to bring someone into a white labeled environment where you can educate them, you can monitor their credit, you can get them to understand what the milestones are in working towards being able to buy a home, and be able to celebrate their progress as they get closer and closer, right? If you do that, you're going to build relationship and trust that's going to make a quarter of a point, an eighth of a point, just completely irrelevant in their consideration set when they think about, we finally found that home. Who do we do business with? It's going to be the person who's helped us get there all the way along. So I'll stop there and let my dad chime in on a few things.
Yeah, that's awesome. So let me add this. Last year, 54% of purchases were first-time buyers. That's obviously the reason why we need to be going after those. But let me give you a bigger reason than that. Look at population numbers. If you look at the baby boomers, my generation, and the millennials, you're going to see that there's 133 million people in the U.S. that were born into those generations. You look at Gen Y, Gen Z, 168 million people strong. Almost a 40% increase in population growth in the last two generations, all of which are home buying age right now. So we are sitting on the biggest opportunity for purchase we've ever seen. And here's the deal. Jake was so right when he talked about the longer sales cycle, but let me tell you what else you need to be focusing on. A lot of the first-time buyers, they grew up in a home where their parents went through the 2008 to 2010 disaster. They're a little wary about home buying. You've got to be an educator first. Jake said it great. Quit quoting rates. Quit talking about products till you're blue in the face and the borrowers have no concept what you're talking about. They don't understand mortgage terminologies. Talk to them about the benefits of home ownership, wealth building, the fact that renters versus homeowners have 40 times the wealth on average of renters in the United States. That's number one reason you want to own a home. Talk to them about tax benefits and all of the great tax benefits that come with home ownership. Talk about equity appreciation. Talk about all of the things that make sense, and then show them how to get into a payment they can afford. That's the key. Remember, you don't pay a rate, you pay a payment. Focusing on rate is senseless. What you want to do with today's first-time buyers is sit down with them, do a budget with them. Don't just do a DTI calculation. Do a budget with them. Find out, what are you paying now for housing? What can you comfortably afford? And let's start to back into that to find you the right house. Because the mistake we make is they go find a house that they can't afford, and then they're frustrated when they can't get qualified for it. You got to reverse the cycle with first-time buyers. begin at the beginning. What can you afford? And then build around that, and you will crush the first time buyer market.
Yeah, and I'm going to throw one more log on the fire as to why. And I've said this from this stage a couple times, so if I'm repeating myself, apologies, but I think it's worth repeating. Before rates started to come down, I did a perplexity search where I said, hey, I'm a loan officer doing some strategic planning, and I want to know how many more people will qualify, be eligible and qualify to buy their first home if rates come down 0.5%. And the answer was like 2.4 million. And I was like, cha-ching. And then I said, what if rates come down a full point? And then it said 5 million. Now, where I got surprised and what I think everybody needs to pay attention to is, again, this is before rates came down. I asked how many people are eligible and qualify right now to buy a home? And the answer was 9 million. Like your database, your local market is full of
Yep.
people that qualify a month ago, 6 months ago. And I asked why, why are they not buying? Because they have misconceptions of what the down payment required to buy a home is. They have misconceptions around credit. And so my message to everyone is that's your job. Like that's not the government's job. That's not, it is school's job. So it is frustrating that our public education does not teach financial literacy and homeownership readiness as part of being an American. Like that's frustrating to me, but that's our job as a mortgage industry is to be
Yep.
industry that teaches America like homeownership readiness awareness. Any last thoughts, guys, before we move on to another topic?
Can I add one more on that?
Of
We need
course.
to redefine for first-time home buyers this idea of a starter home. Okay. Um, I don't think it's just misconceptions. I think that's a huge piece of it is misconceptions around down payment, around credit, what it actually takes, how valuable is homeownership in the long run. Granted, I do like to say to people, if you think about it, a 6.3% interest rate on equity is a lot better than 100% interest rate on rent, right? Because you're getting nothing back with every dollar out the door when you're renting. But I think part of the reason why first-time homebuyers are gravitating towards apartments over homes in a lot of markets is because the homes that are available, frankly, aren't as nice as the luxury apartments that are being built by the developers. Okay.
True.
Think about this. This is the first major generation of homebuyers that has been fully exposed to social media and the influencer culture in American history. So they have expectations about what a nice home
Yep.
is and what type of home they want to live in that no previous generation had. They just bought a house and they found the best one that they could for what they could afford. So we have to temper some expectations, and we have to recognize as professionals that if we're asking someone to invest in the equity economy, and that's what we're doing through a home, we have to make the case that equity is more desirable in the long run than the nice apartment that they can rent today, but not build any equity. Does that make sense?
It makes
Good.
perfect sense. Because by the way, guys, I'm on both sides of that fence because I have kids that I help buy duplexes and triplexes. And right now, they're living in high rise, Four Seasons like clubs, and so there is a new dynamic. And guys, that is our responsibility as an industry to educate. And I love the language that you use, Jake, the equity economy. By the way, guys, if you are not following both these guys on social media, make sure that you follow them. Jake is one of the best news sources, insight sources on LinkedIn. Not saying you're not, Dale. You're awesome, but you're a legend and everybody knows you. Make sure you're following Dale. But literally in the past, I don't know, 18 to 24 months, I've just you're one of my go-to sources for what's Jake's take on this. So Jake just shared links to both of those. Make sure you follow it. Also, just reminder to all the First Home IQ people out there, I put a link to the First Home IQ link under my name. And I want to remind you guys, it's not just about the 15 question, 5-minute quiz. Like, it's the tip of the spear. Like, one of the links takes you to a YouTube channel that has free educational content around budgeting, around what's your money personality, around credit education. One of the links takes you to our online classroom that was designed for teachers and parents and advisors. And by the way, guys, it's free. Like you can use it as a free resource to be your first time homebuyer platform. So check it
So
out.
powerful.
Awesome.
So powerful.
All right, guys. So we're almost at halftime. I think we've gone really high level strategy. I really want to get into some tactics, like what is working, what's not working. Dale, let's go first with you, and I'll let you pick whether you want to like what's not working, what is working. But
Yeah.
let's start getting tactical for everybody.
So what's not working is loan officers who think that consumers want everything to be tech-based. The high-tech loan officer, believe it or not, even though we're in a high-tech world, is failing miserably in most parts across the country. Now, let me be clear on this, okay? Your technologies like MortgageCoach and your CRM, all of these are incredibly valuable. Okay. I'm not the old man on the corner who's screaming that says, the world's coming to an end, don't use technology. You better be using technology. But here's the deal, you need to be high tech, high touch, not just high tech. That's my point. Okay. Where we don't have a conversation with a borrower. This is where the mistake is happening. Okay. You take a technology like Dave has created and you couple that with a deep relationship, a deep understanding of the borrower because you had a good, deep, meaningful conversation about their goals and their dreams and their challenges and their situation and their qualifications. It is 1,000 times more powerful than just by itself. There is no technology that today is designed that by itself is going to get people to make a mortgage decision. This is the single largest financial decision people make in their lifetime. They need an advisor. So what's not working is high tech only. You got to be high tech and high touch. And what is working is conversation, deep conversation. Quit texting, quit sending links. The number one thing that is killing numbers for companies, and I'm training tons of them, and I'm working with tons of CEOs around the country, the number one thing that is detracting from their results is the loan officers who won't even have a conversation with the borrower. We listen as a team to hundreds upon hundreds of shopper calls and recorded calls per year. Can't tell you how many times I've heard a borrower say to a loan officer, yeah, I'd like to go ahead and I'm thinking about buying a home. I'd like to get my application in. And here's the response instantly. Well, okay, give me your text message. I'm going to send you a link because that's how we do it. Well, no, I really want to just apply right now. No, that's not how I do it. I'm going to send you a link. You fill it out. When I get it, I'll let you know whether you qualify or not. Wait a minute. Hold on. I'm going to go back to Zig Ziglar, one of my favorite quotes of all time. When it comes to new customers, we treat them like a prospect or a suspect. Which one was that right there? That was a suspect. Let's take the time to honor our customers. Somebody takes the time to call you up. You get a referral from a partner. You know what? You want to treat that thing like gold. Technology is critical. Instead of sending the link, why don't we start a conversation? Let's identify their goals. Let's understand their situation. Let's let them know we can help them. Let's share our credentials. Let's win credibility. Let's give them a value proposition with benefits. And then let's say, you know what? I'm going to send you the link right now. Let's walk through it together. If you have questions, I'll answer for you. In the meantime, you can tell me more about the home you want to buy. That's what's working. That's what $100 million producers are doing. They're not just going straight tech. They're having conversations.
So I want to weigh in on that, and then Jake, let's you weigh in on that, and then Jake, you could bring another idea. What's not, what is. First thing I want to say, I couldn't agree with Dale more, and I want you to start thinking because there are people that you talk to that literally would download an app right there on the spot. They may even multitask and download the app while they're talking to you and be like looking at their app and talking to you. And there are people that you're talking to that would drive 20 minutes to get a piece of paper and don't
Yep.
know their password for their app. They don't want their password. Like in today's market, and by the way, in today's market, there will be family members where you're helping a family, and within the decision, like there's a husband, there's a wife, there's a father-in-law that's loading them down payment, there's a brother that they trust. And within that family unit, you have all three of those personalities, the app-driven technology person. And so I always tell people, like when it pertains to Mortgage Coach, it's not about the technology, it's about the story and the strategy. So, like, what's that consumer story? You heard Dale talk about what is their goals. It's like you're helping that family achieve their story, which is not just getting a loan, it's home ownership with financial freedom. So, are you using technology to vision cast their story and to help them pick the right mortgage strategy? So I couldn't agree more, which being a tech founder, people are like, wait a minute, Savage, it's all about tech. No. It's about, and by the way, if you're a local referral-based mortgage professional, trust me, there's going to be online platforms that are like, how can we robo a mortgage and how can we have an AI
Yep.
agent do as much of that transaction as they can? Your competitive advantage is your humanity and your ability to use technology to deliver an incredible experience for people. Jake, what do you want to add to this topic? And then Dale will give
Yeah.
you a chance to do
Two
another
things.
round.
First one's going to be, okay. Yeah. So two things. First one will be really quick. What's not working? Waiting on the market to change. What is working is proactively getting out there and finding the opportunities because they do exist. We're working with clients
Yep.
right now who are probably like a lot of y'all, local, referral based, purchase focused loan officers. They're picking up the phone, calling their databases. No strategy, like just calling, going to call 20, 30 people a day, get through their entire database in a month to 3 months. And they are unlocking refinance opportunities and adding totally new production to their baseline, right? Simple
Yep.
strategy. The second thing I would say that's not working, and I feel for you guys, I really do, because you hear people like us give you a bunch of ideas. You hear people like Dave give you a bunch of ideas. Dave's gonna have someone next week who's gonna give you more ideas, right? It's overwhelming how many strategies you can implement. And so I see a lot of loan officers who are sort of spraying and praying, right? You're posting on social media a little bit. You're going to a few events here and there. Sometimes you're dipping in the industry. Sometimes you're sort of staying in your own lane. You're trying different technologies. You're playing around with AI. It's too much, guys. It's just too much. You have to pick, I don't know, 3 things that you're going to just do extremely well and just stay in your lane. So get focused with who it is that you want to partner with, for example, on your partner database side. Do some research,
Yep.
use a Redder, an Ingenious, you name it. Find who those people are, engage with them online, and then just pick up the phone and explain how you can add value to their business. And then just go all in with those partners. Like doing that, calling your past customers, attending open houses like we talked about, those are the tried and true things that are going to continue to drive actual business for you now. And you'll have more time in your spare time as that goes on to be able to play with the new shiny things that will make a difference 5, 10, 15 years from now.
It's good.
Love it. This is great, guys. And by the way, we're holding the audience strong. We still have 98 people on today's call. And by the way, guys, I have not heard any questions yet. Jake is doing a great job of sharing little takeaways, insights. So Jake, you're crushing it. I don't actually know how you do that, how you show up so present. And
I don't
it
even.
actually put a emoji with a text in it. Like I'm like, dude, can you come to all my Tuesday calls? Just be my
Come on, let's
wingman,
go.
wingman, wingman, Jake. But come on, audience. Like, gotta have a question for Dale. Like, I know in the fourth quarter, I want to ask him like, hey, what's happening with the consumer direct, and how real is AI agents? So be ready for that. And like, how far do you think the AI agent will be able to go and in the next year or two? I do want to hear your opinion at some point on that.
Yep.
But before we move off this, what's not working is only high tech. What is working is high touch with high tech. Anything else you want to wrap a bow around that topic on?
Yeah, Jake said something so critical there, and I'm going to use an old phrase to kind of bring that together. What he was talking about was don't be a jack of all trades because then you're a master of none. Okay. And that's exactly what we see as a problem in the marketplace. So let's go back to your database for a minute. Okay. I hear this all the time from loan officers. All right. Well, I haven't called my database in a couple of years, so now I'm embarrassed to call them. Look, you got to stop all the call reluctance. Here's the bottom line. People are busy. They're not thinking anything about that if you didn't call. And by the way, if you called them today and you just said, "Hey, I'm calling. I was thinking about you." Start your database calls with, "Hey, this is Dale. You and I worked together 9 months ago on your loan. I was thinking about you today." The moment you say that, they're like, well, why were you thinking about me? And now they not even thinking about whether you call them or didn't call them. And you say, the reason I was thinking about you, the economy stuff out there, we're saving people a lot of money. I'd love to help you save money today and just show you how I can do that. Do you have a few minutes we can talk through? Because the market has really improved. Use the market to your benefit. And here's the deal. Just call 5 a day if that's what it takes to at least get started to build some rhythm. Think about this. There's 20 business days in a month. 5 calls a day. Well, here's what's going to happen. 90% of your calls, you're going to leave a message. 10% are going to pick up the phone. That means you're going to make in 1 month 100 calls. You're going to leave 90 messages and talk to 10 people, of which you'll get 5 applications. That's 5 new opportunities for a loan. If you pick up 50% of those, you got 2.5 new loans per month that you're picking up just from that 5 minutes a day. 5 minutes a day is all you're spending to do that. The other 90 will call you if you stay consistent and just keep doing it every day. The key to outbound calling, the key to calling your database is simple. Don't do it once in a while for a long time. Do it every day a little bit. It's so much easier. Anybody can handle 5 rejections. It's when we try to call 100 people at once that we get burnt out. Don't do that. 5 a day, every day, do that. You're going to win a bunch of business. You're going to make a lot of money.
When I just heard that rant, I had a thought. And for the first time, I'm going to make a post where I have emojis. Thank you, Jake Vermillion, for inspiring me to come up with an emoji post. But like, guys, win by noon. Like before I founded Mortgage Coach and I had become a top producing loan officer in the country, when I met Dale, like that was it. I won by noon. And I knew what I needed to do to win by noon. One of the things I learned from Dale, I don't know how many years ago it was, like 3 lifetimes ago, was like I always had a win by noon. I need to prospect and have my 2 hours-ish of prospecting time by noon. But Dale's the one that told me, you know what? Stack the deck. Start with the people that are qualified. And he had a criteria of, they have equity, they have credit. I came up with, and they were cool. They gave me energy. And then start with them when you start your prospecting, and then end on the people that, maybe they don't have the equity they need. Maybe they don't have the credit they need. Maybe they're kind of a kook and energy sucking. But stack the deck, win by noon. So Dale, I think that's aged pretty well. Like that piece of advice was great 40 years ago. That piece of advice still stands. Let's give everybody like win by noon, Dale Vermillion style. What are some other things if you're a local referral based advisor? Give me a checklist real quick. What else should be on that list?
Yeah. So first off, here's what you don't do. Don't start your day with emails, because there ain't nothing good in there, guys. Let me tell you that right now. That's where all your problems are at. That's where all your cancellations are at. That's where all your frustrations are at. I see so many
Oh no. Jake, you think we're gonna get it back?
I hope so.
shot, and they don't get to it for a long.
He's in the mountains, everybody. Dale is in his happy place in the mountains, and we got to get his Starlink upgraded, Jake.
We do need to do that. Yeah, actually, Starlink would be an
So
upgrade.
let's
fiber up there. I don't know.
Yeah. So guys, I guarantee Dale will be back, and we will get.
Oh, I'm back.
There you are. You're back. So
Sorry about that.
Stop for 20 seconds. All right. So you need to imitate and do a Dale Vermillion.
And let's see if I can do my best Dale. Yeah, let's see what I got. So
let's go. You got it, man.
Yeah, I mean, when by noon, Dale likes to say it this way: sell early, sell often. Right. So it's exactly what you're talking about, Dave. And what I think my dad was getting at was one of the things that we commonly see. Look, we get it, right? We all want to live out of our inboxes. But the reality is, if you flip open your phone, if you flip open your inbox first thing in the morning, what you're going to find there are mostly the problems, right? It's the things that are going to bleed more time than you have to give. And you're going to miss out on the prime windows to contact your partners, your customers, to have clear thinking space about what's most important to do today. So yeah, absolutely. We recommend first thing in the morning, you have to protect that. And we like to recommend, honestly, even get your house in order. Understand what are your top what are your top opportunities today, and then have some way to have some of a warm up process, right? So if there are people who you're just doing a quick couple of status updates, give those people a call, warm up your voice, get used to talking again. We all know what it's like after you go to sleep, right? So get like into the rhythm. But then by 9 a.m. your local time, you have to be selling. And that's where, as you said earlier, Dave, you're starting with those prime opportunities. Who are your biggest chances? Who are your newest prospective referral partners that you're trying to convert? Who's the partner who's doing the most business with you? Put those people first. It's going to pay dividends.
So I'm going to throw a few things on just while we're doing this checklist to nail it. So hopefully you've got a database that is being monitored. and you're getting your database insights calls. So here at Mortgage Coach Next Generation, we gave you guys an app so that literally you can open that up, see who are the new signals, get an email, a text, or a call, or all three, multi-channel, reach out to that person based
Yep.
on the priority. Like every single data signal is not equal.
No.
Some have a more immediate need than others,
Yep.
but make sure you get your data signals covered. Um, One of the things when I learned from Dale 40 years ago in terms of stacking the deck, it was like
Mm-hmm.
2 apps a day. And
Mm-hmm.
by the way, for the mortgage coach community, that means at least two mortgage coach total cost analysis every day. Like if you
Yep. That's
literally
it.
do these things, you do these things consistently, you will win in this market. So I did see some chatter here. So Linda Davidson said, I try to meet live Zoom with 100% of my clients. By the way,
Love
guys,
it.
I would love to know who's doing that. I highly recommend if you're not, those are recorded. You're using AI notes so that you can give better insights to the clients. And then, Linda, something I've been doing, and by the way, Rocket's doing this with every call that happens at Rocket. They have AI listening to those calls and giving some coaching feedback. So, Linda, start maybe not every single call that you do, but throw it in there with a prompt that, hey, I'm a loan officer. I just had a strategic conversation with a first time home buyer, and I would love you to listen to the call, give me some sales coaching advice. Personally, I love the book Challenger Sales. So I always go with infuse some ideas and strategies for Challenger Sales. And, let me know what I can do better. So make sure that you guys are recording calls, you're getting coaching on calls. Jake, I heard you not, kind of nodding on that, and I know Rocket like has that automated where they are AI
Yep.
automating. What are your thoughts? Any feedback on that strategy?
Yeah, no, it's hugely powerful. We actually do this for our clients, right? Dale mentioned earlier that we secret shop retail clients, right? Because can't just have recorded calls in most cases. Few record their calls, pretty rare though. And then with our consumer direct clients, obviously we recorded calls. So we've integrated even with some of our clients' dialers to be able to ingest their calls and to be able to apply a scoring model so that we can give direct feedback to the loan officer. Now, the thing that I will say is depending on your call volume, um, it's good to have like a way where you're flagging calls that were problematic. Now, you as a loan officer, especially an experienced loan officer, should know when a call is going well or not well, right? But what I tend to find is more helpful than reviewing every single call is to look at the aggregate over the course of a week. What were the wins? What were the losses? And then have a couple of key takeaways. I think one of the concerns around the ability that we have to be able to have everything and anything that could be termed data, right, processed by an LLM, is that we'll just overwhelm ourselves with data, right? So I would say be strategic in what it is that you're looking to improve on. Think in terms of like sprints, the same way that you would in like when you're working out, right? Like if you get into working out, you plan what's called a 3 month mesocycle, right? So like, what's the big picture of the 3 months? Like I'm working on upper body or lower body or conditioning, right? It's like one of those three things. I think it's got to be the same for you as a salesperson. Like, what are you working on right now? Is it your prospecting pitch? Is it converting that upfront customer that you just talked to in an application? Is it just your tone of voice? Is it being more educational, but in a way that's not overwhelming to the customer, especially first time home buyers? Like, figure out where it is that you have some weaknesses, and then give yourself a couple of months to just really focus on that one thing and get better at it. And then you can tailor your model that you're using for feedback to specifically speak to that and not every aspect of the call that could be diagnosed. Does that make sense?
It makes perfect sense. Linda Buchanan, by the way, just said that I put all my calls into ChatGPT and asked for a DISC assessment.
I thought that
Um,
was interesting. Yeah. And
I
I don't know if
hadn't
she's doing
thought of
that for
that.
herself. I'm assuming she's trying to disc assess the customer to know how she could interact with them better. That's a great idea.
That's
So
what I took. And here's the deal, guys. Experiment. Get out there and play, interact with whatever AI platform that you use, and test it with different ideas, with different strategies, so that you can be a better local referral-based advisor to consumers and do it in a way that you win your database and you win locally.
so
Um,
good.
so we got a question here from where was that one? I saw a great question. Greg said, give us a quick step-by-step win by noon prospecting plan. I'll take the first swipe at this and then throw it to
Cool.
you.
Yeah.
Um, So first of all, I'm not going to tell you what the plan is. I'm going to tell you how to figure out your plan. Like, and by the way, there's a great planner. You can go to winbynoon.com. Highly recommend getting it. But first of all, you got to know what your goals are. Like whatever your financial goal is, and then you got to work back. And figure out like what's your conversion. By the way, Greg, do you know your credit report to close loan conversion? In order to have a great win by noon prospecting plan, you need to know your conversion. And the best of the best know their conversion. You need to know how many people you have in your database, and how many people are having an annual review. And then you're like, hey, these are my goals. This is my database, this is my conversion. And then put in the numbers. Like selling is math. Math doesn't lie. And always be trying to upgrade your conversion. And then again, I'm not here like some people want to close $100 million a year in business and be a one percenter. Most people don't, and that's okay. Like to me, like when I came up with the definition for the uncommon LO, it was winning. Someone who's winning in this market. And to me, the definition of winning is, are you hitting your goals? Are you happy with your financial success? Are you happy with where you live? Are you achieving your goals? That's winning. Winning is not being $100 million producer. By the way, that is winning, but that's not winning for everybody. So hopefully that helped, Greg. And then we got Dale back. Dale, the question was, give us
Sorry about that, guys.
oh, don't worry about it. That's what mountain
We
life, baby. You know,
we had a Wi-Fi meltdown. Thank the Lord for being able to use your cell phone. Get a
yeah, no,
hotspot.
no, you're back. And Greg had asked for a quick win by noon prospecting plan.
Yeah,
Anything
yeah,
you want to share on that topic?
absolutely. So I was starting to say when we were talking about this, number one rule is sell early, sell often. Okay. That's your rule. Don't start your day with email. There's nothing good in there. That's just trouble spots. It's going to blow your attitude, create all kinds of problems, and slow you down. What you want to do is you want to bifurcate your sales in the morning between your database calling to your past customers. And by the way, don't just call past customers. Call past turn downs and cancellations. All the years that I managed for 12 years before I ever became a speaker and consultant. 25% of all the loans we closed were cancellations and turn downs. And remember, you got a lot of borrowers who were in the market last year and the year before when rates were much higher and inventory was much lower, that were frustrated by purchasing a home and they dumped out of the market. You call them proactively and bring them back in the market. You can create a lot of business doing that. So bifurcate that as one piece. Spend 20 minutes, 30 minutes if you can each morning on your database, past customers, past cancellations, past turn downs. Then spend the other 20 to 30 minutes first thing in the morning on prospecting for your realtors. And here's the key to that, okay? The key is don't call them with the traditional call of, hey, I'm a lender. I wouldn't talk to you about what we do. Instead, what I want you to do is build a presence with them online over a 2-week period where you're liking their posts and you're resharing and they're getting to know who you are. Do your research, learn 2 things about them that would matter to them, that are important to them. Maybe that's an accomplishment of theirs. Maybe they won an award. Maybe they were a top producer. Maybe they've got 20 years in the business. Or maybe it's a fund or a charity that they're leading. Or maybe it's an event that they ran. Know 2 things of personal importance to them. Start the call with that. Hey, Mr. and Mrs. Realtor, reason I'm calling, I'm a local lender like you're a local realtor. I love working with the best in our local community. And you are certainly one of those. Congratulations on the incredible event you ran last week. Congratulations on being number 3 in the county last year. I just want to let you know how much I appreciate your impact in our community. Always use the term our community and then make the statement. Would you be willing to get together for 15 minutes just to talk more about what you're doing? Maybe I can share what I'm doing. And let's find some ways that we can build more customers and sell more homes. Boom. That's it. Don't make it about you. Don't make it about your business and your credentials. They don't care about that yet. Make it about them. If you do that each morning, 30 minutes on each side, and you're calling 10, 15 of your customers on the database side, 4 or 5 agents on the network side, you are literally going to have 75 people in your network within 6 months. Guaranteed. You'll be doing crazy numbers. You'll be super successful. It all comes down to personal relationship again.
Boom, script alert. There is a clip for the Uncommon LO, guys. What a beautiful script. Hey, so right now, rates have come down. There's an incredible opportunity to gain market share with realtors because a lot of loan officers are just chasing rate and term refis. So,
Yep.
guys, double down on that script right now. But on the converse side, there are some great rate and term refis. And I interviewed Andy Zeman a couple weeks ago who said, hey, I said, how are you managing this market? And he says, hey, I'm doing refis early in the morning after I do my realtor stuff in weekends. What are your thoughts for all the local professionals that are trying to balance that realtor and refi? And what's a good, call your past customer database and grab a rate and term refi right now? What are your thoughts on that, Dale?
So here's the deal. I'm not sure that balancing like that is, first off, even possible. And second, I'm not sure it's the best thing to do. Here's the reason why. Okay. What is the number one thing that consumers look at when they look at customer experience and customer service? Responsiveness. That's number one in every survey I've ever looked at. And I've looked at thousands of them over my career. Okay. How quickly you respond. So if I get somebody who is interested in a refi today, I'm not going to wait because that ain't my day to do refis. I'm going after that sucker right now. I am not wasting 1 second on that because in today's marketplace where, borrowers are impatient, and they are because they're used to everything being fast because of technology. If they reach out to you, they're not waiting around for you. Okay. You're going to lose deals by doing that. So what I would tell you is be build flexibility in your schedule so you can be responsive to the needs of your customers. And when you get somebody who contacts you and they're interested in saving money, they're interested in looking at lowering the rate, they're interested in talking to you about maybe using their equity, that is your number one priority. Go after it. Let me remind you of this, okay? This is such an important thing. And I'm about to say, I've taught this for 30 years. It only takes one sale a day to close 15 loans a month. That's it. If you literally get one borrower a day to agree to complete an application, give you documentation, and sign an intent to proceed, you put 20 deals a month in your pipeline. At a 75% average close rate, which the industry standard is, you're closing 15 loans. So we always are thinking bigger than we need to. Focus on the interested borrower in front of you. Sell the one who wants to talk to you. And then once that's done, now you can move to the next realm of what you want to do. The key is just block out sales time. Doesn't matter if it's selling to realtors, selling to borrowers, it's all sales. It all makes you money and it all makes you successful. That's the way you want to approach it.
Well, it's a good script to call someone in my database right now and engage them in a rate and term refi conversation.
Hey, Dale Vermillion, you and I worked together on a loan a year ago. I don't know if you've seen what's happening in the market, but the market has turned and we are saving people a ton of money. I'd love to talk to you about how this could impact you in a powerful way. Oh, that's it. Add the I was thinking about you, and they love that, like I talked about before. You want to focus on savings, not rates, not products, not any of that stuff. You just want to call them up and say, hey, the market's better. We're saving people money. I've done it for others. I could do it for you. Always use the example that you've worked with other people and you've got a proven methodology. Those things will win you deals. And remind them there's no cost or obligation to find out what I can do. Always use no cost and obligation in your conversations because then they realize they're not on the hook for anything. All you're going to do is see what you can do. It's a no harm, no foul approach.
Guys, this has been a killer call. We are in the last 5 minutes of the fourth quarter. I am gonna want a question on like, hey, both of you, I want to hear like, what do you think the next 3 years look like from an AI perspective? Before we hit that last questions, what are the best places to follow you guys? Like if there's a manager on here that wants to learn more about your consulting, your coaching, Jake, you talked about how you help record conversations and provide feedback. What's the best way to follow you guys and learn more?
Yeah, just mortgagechampions.com or just shoot us an email. I'll post both our email addresses in the chat. You also have our LinkedIn. So if you're active on LinkedIn, just shoot us a DM. Like, we're really easy to get a hold of. But we start everything with a conversation. There's no pitch. It's just a conversation, understand your business and make sure we're a right fit and understand what your goals are. And we go from there.
So if you're watching this in YouTube, there's going to be one link brought to us by housing.link. And within that link, every link that I've mentioned, we'll have it in there. And then we'll have Dale's contact information. And trust me, guys, like these guys, that call will be valuable. You know, if you are a branch manager, have your regional talk to them. They know how to help both consumer direct and distributed retail. And to me, there's a lot of value in the fact that they understand the mindset, the processes of a consumer direct, and they can help you guys win locally and they can help you win nationally. So Dale, last question, and Jake, give your feedback. You know, when I was at the AI summit and I heard what Rocket's doing, where literally AI agents are outperforming humans at that first early stage of warm transfers. Uh,
Yep.
you know, I've heard that from multiple folks. Where are we at today from an AI agent perspective, and where do you think we'll be 2 years from now?
So I'll let Jake answer the 2 years from now. I think he's really well equipped for that. I will tell you where we're at today. Okay. Loan officers need to get their game to an A+ game. You need to be a little bit nervous, to be honest with you, because the AIs are darn good. They're better than most calls that we listen to. We listen to hundreds upon hundreds of calls. I mentioned that earlier. And when I hear an AI call, it's usually about 10x better than the vast majority. Not all of them. There's some killer loan officers that we tape, and especially the ones that we train. They're exceptional and they're closing tons of loans every month. But for the average everyday loan officer out there today, AI sounds way better. Now, here's the advantage you have. It's still AI. I think most consumers still want to deal with a real person, a human being with emotions that can really converse and educate and do all of those things. I don't think they want an AI agent. So if you get your game to a highly conversational, highly relational, highly professional level, like we've been talking about, you're going to beat the tar out of AI agents. But if you don't get your game there, they are going to be your nemesis. I can promise you that. And it's just a matter of time before CEOs realize, you know what? This is cheaper than human capital. It's working pretty well. We're going to use more of this. So my advice is now's the time to get your game to that A game, and now's the time to level you up to the highest level you can get.
Jake, 2 years from now.
We have no idea. We just can't know. I mean, to be honest, it's just changing too quickly. And so
Yeah.
I wouldn't prognosticate and forecast and spend a bunch of time on LinkedIn listening to what everyone thinks is going to happen 2 years from now. I would focus on what you can do today to be competitive. You need to be
Good.
somewhat aware of the technology, but you don't need to be over invested in it at this moment. Other people are going to do the early legwork and figure out what works and what doesn't. There's a lot to think about in terms of the borrower experience of, okay, great. Those are good upfront conversations, but at what point do you actually transfer that customer from the voice AI to a human, right? I think we know what the rationale and the metrics should be, which is that there are certain types of questions and information that you can either gather or give that are totally transactional in nature, right? Does someone qualify for a specific type of product? What's the difference between different types of products? What's the difference between a 30-year term versus a 15-year term? What is different though is information that can be given or got that is emotional in nature. And that's what we do as loan officers, right? It's not what's the difference between these two terms. It's which one is better for you. What's the better
Yeah.
loan? And no one has
Good.
solved how to use AI to do that well today. So I wouldn't worry so much about it. Do what you do well, become an exceptional, emotionally connective, relational loan officer, and you're going to be fine for years to come. That's what I would say.
Yeah, and if I could add one more quick thing, Dave, there's also the whole issue of licensing. Okay, we don't know yet where that's going to land, but at some point, the government's going to have to address that because you have to be licensed to be able to offer a loan. There are no AI parameters right now. As they build those out, that could also stint and stop a lot of the AI activity as competition. But again, look, let's just beat it before it happens. And I love what Jake just said. It's so true. Don't worry about these things. Like, don't sit in your home and be fearful of the things that you don't even need to be worrying about. They say 90% of what we worry about never happens, and the 10% that does isn't near as bad as we thought. So remind yourself of that every day.
Yeah, and I'm going to close this topic and wrap up today's call on this thought, guys. Like everything that can be automated will be automated.
That's right.
And
That's right.
the superpower of today is speed of learning. You know, how quickly can you learn new processes, new strategies? As Dale said, he listens to calls where AI is beating a lot of humans, but there's a lot of humans who are beating them because they're learning. They're
Yeah,
humble. They're curious. They're probably using they're using Dale and they're using AI to give coaching feedback. And then they're improving their questions. They're using the right phrases. They're using best practices. So, you know, the only thing you should worry about is if you're unwilling to change and if you have a not a growth mindset, but you're like, hey, old school, you know, this is good enough. By the way, you'll have a chance to change your mind. It's just you will be humbled and you will have to change your mind. So, you know, be
yeah,
growth minded, learn fast. Dale and Jake, it was awesome. You know, first of all, it's awesome having you both, but Dale, how proud you must be to go work
I
with
am.
your son and to, you know, he's become such a
Yep.
great part of our industry. So it was like cool having a father and son team on today's call. So I really enjoyed that. Everybody, let Dale and Jake know what you thought of today's call. Use those reactions. They're going to get a heart from me. I loved it. Make sure you follow both of these guys on social media. If you're an executive, a leader, make sure you learn more about what they do. Just a conversation away. Guys, this is a wrap. Make sure that you follow this channel, subscribe to the Mortgage Coach YouTube channel, and then make sure you are subscribing to the Uncommon LO on Instagram and TikTok. This is a wrap. Take care, everybody. Thanks again, guys.
Thanks. Thanks, Dave. Appreciate you.
Thank you, Dave. Appreciate you
Appreciate
having
you.
us on.